What's going on, everybody? Jeff here. Welcome back to the channel. Jerome Powell just finished speaking after delivering another 75 basis point hike. Now, the initial reaction at 2 p.m. played out like it has the previous times. A quick pop followed by a heavy, bloody sell-off, a spike in the VIX, the fear and volatility index, not knowing what is going to happen, followed by a little bit of a rebound. However, which we still do have 30 minutes left of market open. Okay, we're not getting that end of day, last hour Powell pump like we normally see. There's a couple things that have changed. Okay, there's a couple things that Jerome Powell stated when he was speaking, and I want to go over them with you guys inside this because it's really going to shift investors' forward-thinking attitude when it comes to specifically rate cuts. Okay, now, the reason why I talk about rate cuts at a time when they're hiking is because they're always looking to get ahead. All right. The market price is very far ahead, 6, 9, 12 months ahead. And they know that eventually we're going to get into a time where the economy slows down even further. Growth slows down even further. And in order to kind of speed those things up and get things rolling again, they're going to have to cut rates. Okay. Now, more specifically, if you really want to get things rolling, you might have to, give a little stimulus like we did back in 2020 during COVID. However, I don't see us going that far. But when it comes to cutting rates back to really, entice people to buy homes again at a lower interest rate, okay, with small businesses to, borrow money, to expand, it's a very good way to kickstart the economy. And the chance of that happening is pretty much 100%. The biggest question is, when is it going to happen? Okay. And I feel that investors' time frame on this was a little bit short, and I might have been wrong thinking that. However, what Jerome Powell had kind of reiterated in today's meeting, which is what I'm going to go over in just a moment, really clarified that. All right, so think about this not only in the short term, a little bit of relief rallies we might have, okay, but think about this in a longer picture, especially if you're looking to really start to ride this next run up. I'm going to cover everything for you guys, so let's get right into it. First off, Fed again hikes interest rates 75 basis points, something we already know. One thing that, Jerome Powell stated, which is, pretty consistent is, let's see, I think it's right down here. Yeah, he states, my colleagues and I are strongly committed to bringing inflation back down to our 2% goal. Something that he's continued to state. However, here's where things change. He stated today that they cannot fail to do that, meaning it doesn't matter, in their eyes, if other things start to crumble, okay? They're going to basically have to pick up the pieces by, like I said, doing rate cuts further down the road in order to kickstart the economy again. But first things first, and that's inflation needs to go down. You cannot save the economy while we're still running very, very high inflation, okay? It's actually just gonna hurt inflation. So he's continuing to maintain that very hawkish stance, okay? And really that started ever since the Jackson Hole Symposium, where he came out and he said, listen, there's going to be more pain when it comes to household. And if you take a look how, the market reacted, I do have an hourly chart right here showing there's just this range boundness we're still in, and we're continuing to sell off, quite a bit, but it seemed like it was very typical. We got that red pole, and when he starts to talk, it's just rise, rise, rise. In the last few, I think it was the last 4 meetings, it was the same, and it just continued to rise. We would have seen maybe 392 to 394 on the SPY, and eventually gets into his talking, and he's like, listen, I'm really not able to give any confidence for investors to, step back in, heavily to the long side. Okay. Now we did just get a little bit of a bounce that, all right, it was great. We got the 75 basis points. It wasn't 100, 18% of the market was pricing in 100 basis point, rate hike, which I do believe to be a little bit high. Now, currently the market is 65% priced in for another 75 basis point hike in November, followed by a 50 basis point hike, bringing the total Fed fund rate around about that 4.25% going all the way into the end of the year. But if you zoom out a little bit, which is why I have this chart drawn up right now, you can see we've really just chopped and been range bound. Now we still, like I said, have about 30 minutes before market close to where we get a little bit of direction. Are we going to see that next, leg down to that 375, even sub that and retest June lows of 362? Are we going to rally a little bit until, okay, the shorts again to pile back into their positions, get some resistance around 394, test some of these levels that are a little bit higher that we broke through just so quickly. You look back to the 13th, when CPI was released, and we went all the way from a high of pre-market at 415 and just smashed all the way through that, got down below 400, haven't really gone back and tested that really, really big psychological level. So it might take a little bit of time for that to happen. But there's a couple other things I want to go over that Jerome Powell had stated. I have a couple notes here. The first thing I do want to state is he said, we have recently entered the most restrictive levels that are now available. Basically, some of the data that, the Federal Reserve oversees, it's lagging. Okay. And finally, they're starting to see this, as much as it was very clear to you and I going all the way back to really the end of last year that, listen, inflation wasn't going to be transitory. And the amount of money that they printed is going to cause chaos. Well, unfortunately, that they don't really go based on opinion or let bias kind of control any of their forward outlook. It's strictly kind of a, reactive looking at data. Hopefully that changes, down the road. But the data that they're seeing is just, it's becoming worse as we go. Even though, you listen to Biden speak, okay, on 60 Minutes the other day, and he said, yeah, but inflation's kind of just, been stagnating. Some of the data coming in that is lagging is starting to show levels that are getting to be much worse, okay? Last thing he did state, I do want to just quickly mention, is he stated rates have a long way to go, okay? So I will show you guys what was priced in, all right, when it comes to, looking forward. And if you went all the way out to July, and then this is slowly changing, obviously, as we move, but when you started to go out to July, you started to see back at this, 4%, maybe 4.25%. And when you looked at December, that 4.25% and 450 was much higher. And they said, listen, chances are by the time July hits, energy prices are going to go down. The economy is going to be taking a big hit. Everything I stated at the beginning of this video, and that they would eventually need to start cutting rates in order to kickstart the economy. Well, now the market is shifting, investors are shifting, and chances are that this slowed, continued, chop, by heavy, legs down, by slow grind, those relief rallies to the upside, by that continued movement to the downside, is likely to last for at least the foreseeable future when you think about the next 3 to 6 months, until we can get those really solid evidence that not only has inflation peaked, but it's come down and that it's not going to be turning around to the upside anytime soon. So keep that in mind. I think this FOMC was just a little bit different, and we haven't seen that Powell pump out of it. So it'll be really interesting to see exactly what happens overnight, but I'll keep everyone posted, guys. That's it for this video. I'll see you in the next one.